Hello everyone and welcome back. If you are a SACCO manager, a board member, credit officer, or you are a money lender, or even someone who is planning to start a lending business, this video is mainly for you. One of the biggest challenges facing money lenders, facing SACCOs, is loan default. Many institutions have enough members, they have enough deposits, but they even have enough demand for loans from people. They are mainly struggling to grow because a large percentage of borrowers fail to pay. And the truth is, loan default does not happen by accident. Most loan defaults begin long before money is disbursed. So before you start disbursing the loan, loan defaults have already started. Today, I'm mainly going to share some strategies successful SACCOs use to reduce loan defaults. These are approaches that can be implemented whether your institution has 100 members or 10,000 members or 100,000 members. And at the end of this video, I'll be able to show you how technology and digital systems like SafeNet can significantly reduce defaults as you improve your SACCO, as also you improve efficiency. So you should be able to listen in this video and be able at the end of the day to understand how we can be able to deal with SACCOs. One, we need to understand why people default. Why do people actually fail to pay? Because before we solve a problem, we need to need to understand why it actually happens. Most SACCO owners think borrowers default because they are dishonest, and that's not true. Actually, that's just a small reason why people default. Most loan defaults happen because of poor lending processes. So you notice that your lending processes might be poor. Here are some of the causes. The first is poor loan appraisal. If you have, for example, sometimes institutions give loans simply because someone is a member or because they know the borrower personally. So you find out that you just give loans because you know someone. Instead of evaluating repayment capacity of the person, they rely on trust. You assume that you trust someone without evaluating their repayment capacity. So trust, yes, trust is very important, but lending should always be passed on evidence. So when you want to give someone your money, the issue should be evidence. Do they have capacity to pay back the loan? That's why you ask for guarantors. That's why you ask for loan security. So yes, we give loans on trust, but evidence must be core. The second reason is lending beyond someone's ability to repay. So you give someone money, but they cannot have the ability to repay back the loan. Just because someone requests for 20 million shillings does not mean they actually qualify for 20 million. And that's something that we normally forget. Me asking that I need a loan of 50 million does not mean that I have capacity to qualify to be given 20 million. The loan amount should match the borrower's income, business performance, and repayment capacity. Those three elements must be in touch. The borrower's income, the business performance is if they are looking for business loan, but also their repayment capacity. The third reason is poor follow-up. That yes, you give loans, but you have poor follow-up. Some SACCOs only contact borrowers when they have already missed several installments. So by then, the problem has become much bigger. So it means someone has missed to make some payments, and that's when you are looking for them. And the problem has already escalated. It's already much bigger. Another big issue is manual record keeping. So you notice that files get lost along the way, and you are not able to track these issues. But also, payment schedules are forgotten. Sometimes people forget when they are supposed to make a payment. Then officers don't receive reminders, management lacks real-time reports. Then all these issues increase the loan defaults. And finally, economic challenges also come at play. Sometimes we call this, I think in law they call it force majeure. Businesses fail, markets change, unexpected emergencies also happen. That's why risk management should always be part of the lending process. Second, you need to improve loan appraisal as a SACCO. As you are trying to start a SACCO, you need to understand on how you can improve loan appraisal. The first solution is strengthening your loan appraisal processes. As a business, the way appraising is you qualify someone. You want to understand their behaviors. Are they good borrowers and the rest? So every loan should answer one important question. And this is what SACCOs, you should, when you want to give a loan, the loan should be able to answer this important question. How will this money be repaid? Not how it will be spent, because for you are less concerned about how someone is going to spend this money. Yes, you want to know what are they going to use this money for, but your biggest problem and your biggest concern is how the money you are giving them will be repaid. So there is a difference. A borrower may have an excellent business idea, but if that business cannot generate enough cash to repay the loan, then it's a risky loan. And a good loan appraisal should be able to evaluate income sources, existing debts of the person, monthly expenses of that person, business performance itself, the employment stability of the person, previous repayment history of that person, the collateral value of the loan, also the guarantor strength. These are things that you must really focus on. So never rely on one factor alone as a business. Income combines several indicators. Instead of you focusing on one value, you need to focus on several other indicators before making that lending decision. So some institutions always use scoring models. For example, you have a credit score. So you need to have those scoring models, and borrowers earn points based on different risk factors. So you have risk factors, you have points that you qualify someone to take the loan. Higher scores qualify for higher loan limits, then lower scores receive smaller loans or require additional security. This reduces emotional decision making, that instead of saying, I know this person, you ask, what does data tell us about this person? And that shift alone can change how you give out your loans. The other factor that we need to also think about, we need to use credit bureau checks. One of the biggest mistakes many lenders make is lending without checking the borrower's credit history. So today, most countries, including Uganda itself, we have a licensed credit reference bureau. So countries have those licensed credit bureaus, and these databases show someone has defaulted elsewhere. So for example, also some systems support that, like SafeNet, the system that money lenders use and SACCOs, has credit integration. So CRB integration helps you to know that this person has borrowed or defaulted elsewhere. Imagine giving someone a loan of 15 million shillings only to discover later that they already had defaulted 3 other institutions. That could have been avoided through the use of credit reference bureau. So every serious lending institution should perform a credit reference bureau check before approving loans. So systems like SafeNet have integrated CRB verifications directly into the loan processing workflows. So instead of officers manually checking multiple platforms, everything happens within the loan application process in the system. That saves time while reducing the lending risk. So you also need to monitor loans continuously. You need to continuously monitor the loan. Loan management does not end after disbursement. I keep telling this, my friends, that loan management does not end after you have disbursed the money. In fact, that's when the real work begins for a loan. So successful SACCOs monitor loans every day. You need to be having loan monitoring features in the system that you are using. Not every month, every day. So that you are able, borrowers should be able to receive payment reminders before due dates, not after they have defaulted. You find that for you only remind people when they have defaulted. You need to have those daily reminders when loans are due, not when people have defaulted. Credit officers should monitor loans. They should monitor upcoming installments, loan payments, missed payments, high-risk borrowers, loan approaching maturity for loans. These are the things that they need to know. But also high-risk borrowers. The area you identify a problem in your borrowers, the easier it is to be solved. So modern lending systems automatically generate these alerts. If you are using a system as a SACCO and you're not only relying on Excel, you normally generate these alerts automatically. You are able to receive reports. Credit officers can receive reminders. Borrowers receive automated SMS notifications. And nobody has to remember everything manually. So technology is something you need to use to routinely help you. The other part that to be able to reduce loan defaults, you need to digitize loan management. I've kept emphasizing systems. This brings us to one biggest game changers, digital transformation. Now we are going digital in each and everything, and it's unavoidable that everyone, if you are not using technology, you are making losses. So paper files, manual calculations, physical registers that you do have in your SACCOs in villages and elsewhere, these methods worked years ago. But today, lending environment requires real-time information. A digital system like SafeNet automatically nearly every aspect of loan management. So it automates nearly every aspect of loan management. For example, loan applications, loan appraisals, repayment schedules, interest calculations, guarantor management, collateral tracking, SMS reminders, mobile money collections, financial reporting, etc., etc. Even CRB integrations, you can also be able to see dashboards. So everything should be centralized for you as a SACCO, that management can easily identify loans at risk. Instead of discovering problems after 3 months, they identify them within days in the system. And that's a huge advantage that you should be able to bring into your business. So digital systems don't eliminate risk, but they help institutions like yourself identify and manage risk much earlier so that you don't take long. Then also, you need to make repayment easy. Ensure that your borrowers can easily pay back the loan. You find that you gave someone 1 million who is in Kaberamaidu, but you want when they are going to pay 100,000 to come to your SACCO. So really, it shows that you've not made repayment so easy. As a SACCO, to avoid loan defaults, you need to make repayment easy. Another overlooked strategy really is making this as convenient as possible. The more difficult it is to pay, the higher the default rate. Imagine borrowers to travel very long distance to come and make a simple payment. So some will postpone because of transport costs. Others will forget. Some won't come at all. Instead, you need to offer multiple repayment channels. For example, bank transfers, that's agent banking, mobile money, USSD payments, others, SACCOs use standing orders, etc. So that it's easy. Also use digital wallets. Solution like SafeNet application should be able to help you. So the easier you make this repayment, the higher your collection rate becomes easier. So convenience, we notice that convenience improves compliance when you are dealing with people. The other thing is you need to build relationships, not just collections from people. Build the relationship, build the rapport with your borrowers. Many institutions only call borrowers when they want money, but successful lenders do the opposite. They build the relationships with these people. Check on members regularly, even when you are not asking for your money. Visit their businesses. You know you are giving out people loans to improve their business, but you don't check on them. You need to visit their businesses, offer financial literacy, if you can, as a SACCO, understand their challenges earlier. And sometimes a borrower isn't refusing to pay. They simply need a restructuring of their loan or an adjusted repayment schedule. So we understand that communication, when there is communication, you build that trust with the borrowers, and trust improves repayment among borrowers. You also, recovery should also not be the first concern. You need to be, when you meet them, the first discussion is not about recovery, but relationship management should be your biggest concern. So how do you reduce loan defaults? It comes down to several key principles that we have talked about. First, lend responsibly. As a SACCO, as a money lender, you need to be able to lend responsibly. Second, strengthen your appraisal processes. As a money lender, strengthen your appraisal processes. Third, you need to check on borrowers' credit history. Use systems that are integrated with CRB. For example, I keep referring to SafeNet. Fourth, monitor loans continuously. And fifth, use technology to automate your lending operations. Finally, build strong relationships with your members. And always remember, a good lending institution is not the one that gives the most loans. It is the one that recovers the most loans. Growth does not come from disbursement. Growth comes from sustainable relationships. Solutions like SafeNet, automate loan processing, repayment tracking, CRB verification, SMS reminders, financial reporting, and the overall portfolio management, which gives these institutions like yours greater visibility into their loan work and helping reduce avoidable defaults. So our role here is to educate you, the SACCO owner, the business manager, and anyone thinking to start a SACCO, on how you can be able to improve your SACCOs through the use of technologies and systems like SafeNet. So thank you all for watching this video. Please subscribe to our YouTube channel and ensure that every week you come to learn how you can be able to run your SACCO and your money lending very well. Thank you so much.